Today's stock markets are more dangerous and overvalued than 2007, 2000, and even worse than 1929. The secret behind the Chinese gold market and Weir shows the viability of 10,000 an ounce silver and $1 million Bitcoin. This is your Collapse News for March 15th, 2017. This is the most dangerous and overvalued stock market on record. Worse than 2007, worse than 2000, even worse than 1929, or so warns Wall Street soothsayer John Hussman. Presently, we observe the broadest market valuation extreme in history, writes the chairman of the cautious Hussman Funds investment group. With the steepest median valuations on record and the most reliable capitalization weighted measures within a few percent of their 2000 peaks. With the steepest median valuations on record and the most reliable capitalization weighted measures within a few percent of their 2000 peaks. On top of such warning signs as extreme valuations, bullish sentiment, and consumer confidence, he adds, market action has deteriorated in interest-sensitive sectors. As of Friday, more than one-third of stocks are already below their 200-day moving averages. John Hussman called the 2000 and 2008 crashes, so he has a good track record for spotting events. However, timing is always tricky. How much longer will we have to wait? Solving the secret behind the Chinese gold market. Expert estimates total holdings at 19,500 metric tons. The world is full of golden rules. There is one for every field: ethics, communication, fashion, but there is only one that counts: the golden rule of money. Whoever has the gold makes the rules. China, it seems, wants to make the rules in the international monetary system, which is why it's been acquiring vast amounts of gold through both private and official channels. Because of the obscure nature of the Chinese gold market and the reluctance of Chinese officials to show their hand, nobody has been able to accurately calculate how much gold the Chinese have acquired since 2000 when they began amassing it. Enter Kuz Jansen, an analyst with Singapore bullion dealer Bullion Star. He has studied the Chinese gold market for years and recently came up with an estimate of total Chinese gold holdings: 19,500 metric tons, or 21,495 US tons, at the end of January 2017. They have promoted gold ownership as a store of value since at least 2002, but more so when they introduced the Storing Gold with the People concept campaign encouraging private citizens to buy gold in 2004, Jansen said. Weir of RoadToRuta.com has released a video where he explains how the stage is set for a perfect storm of events to skyrocket the price of crisis assets like gold, silver, and Bitcoin. Some of the major factors that are contributing to the perfect storm are the US debt ceiling limit on March 15th. Federal Reserve might raise rates on March 15th. There's a 95% chance they will allegedly do so. Stock and bond market bubbles, sovereign debt bubbles, European Union crisis. As he points out, massive derivatives are written on EU debt, and Article 50 in Brexit is about to be triggered. Also, the Greeks and the Italians are looking to walk away from the EU as well. Government authorities decaying rather quickly, as you can see by the left versus right in America. As a result of all this, trillions of dollars in bubble funds are looking for a home. The global bond market bubble is estimated at $100 trillion, the global stock market bubble is estimated at $70 trillion, and the global real estate bubble is estimated at $250 trillion. Total bubble funds with nowhere to go amounts to about $420 trillion. Professional money managers generally agree you need to have a 5% allocation in these last resort assets. 5% of 420 trillion is $21 trillion. If money managers moved 5% of their entire portfolio into gold, we would have roughly $3,500 per ounce. If money managers were to move 5% of their entire portfolio into silver, we would have $10,500 per ounce. A 5% allocation of these bubble funds would put Bitcoin at $1.3 million per Bitcoin. Bick states that this won't happen this year or next year, but he is estimating within 5 to 6 years we should start to see these kinds of numbers. The lesson seems clear: load up on gold, silver, and especially Bitcoin now while it's still cheap, and then wait. Thank you so much for watching, and don't forget to sign up for our mailing list so we can send you collapse alerts as they happen.